Hello, I'm going to share here. Avoid these four investing mistakes. So, here I'm going to tell you what are the four major investing mistakes you can make and how to not make them. So, don't make those. The first and most important thing is two rules of investing. If you haven't heard of this is the very famous two rules of investing by Warren Buffett. These are the most important rules of investing, and that is don't lose money. So any type of investing, whether it's real estate or whether it's stocks or any of that, the number one rule is don't lose money. And what's the number rule two? It is don't lose money. That is, don't forget the above rule. Why is that? Well, here's a simple equation. When you lose 50% of your money, you need to make 100% to get back to where you are. You lose 50%, you need to make twice the performance, not the same performance. That means you have to perform better, like twice. So you have to double it. So that means you have to work a lot more harder to get back to where you are. So that's why it's very important rule. Now, obviously, you can withstand some losses in your investing, but this is like a general rule: don't lose money and don't forget to lose money. Okay. And the other rule is stay invested, participate in market. What do I mean by that? By that, I mean to say is you can stay on sidelines, not sure, like in cash or not being active. But here's the thing: for a long period of time, you do always goes up. The market is always going up because that's how the economy works. So if you're not invested, you're gonna miss out. Now, obviously, I'm talking about long term, but if it's short term, it's different. But obviously, the most important thing is to stay invested. Otherwise, your cash is losing its value by itself. So stay invested and participate in the market. I'm talking about investing, so which is a long period of time, a couple of years. So depending on your taste, your type of investing, you can choose that for yourself. But the simple rule is to be invested. It would be participated in the market. And I want to tell you one more mistake. That is understanding trading versus investing. Now, trading is not investing, and investing is not trading. They're two different things. Trading is something you are in for a short term, couple of days, or even for the same day, versus investing, which is a long term, at least 6 months to a year. And that's why if you see the tax code, everything is written for long term, and you have better tax code for the long term investing. So if you are like getting into something just to get out or just to make small return, like quickly get out, then you're a trader. But if you are an investor, you're holding for long term, 6 months to a year, or even longer, a lot longer. So that is depends on your personality type and what you are. Now, obviously, you can be a trader, you can be an investor. It's up to you and what you want to do. But you have to understand before you enter: are you being a trader here? Are you being an investor here? And kind of have some kind of guidelines for yourself on what you're doing, so that way you don't make mistakes. Like when you want to be an investor, you're doing trading, or you're doing trading when you should be an investor, depending on the situation. Now, obviously, both are fine, but just understand the difference so you don't make